Off the highs is how you would describe today's session so far. We're up about 36 points on the Nifty, 9,317. So, I mean, it's whipsawing a little bit, but, probably just showing some signs that, the run-up that we've had, the very sharp move that we've had over the last 3 days, perhaps in the very near term is tiring out a little bit. What is up is banks, what is down is pharma and FMCG. So it's the complete reversal of what we've seen over the last 2 or 3 days now. With me, my colleague Sonia. Hi, Sonia.
Hi Prashant, good morning. Absolutely. So, the Nifty is about 100 points off from the top. This 9,500 level is a bit of a congestion zone, right, for the index itself. And the banks are the stars of the show today. I don't know whether it has anything to do with IndusInd Bank's numbers and the fact that the numbers were not as bad as what the street was estimating. And in a challenging environment, they did good. So the stock is up almost about 7%. But on the Nifty Bank, I just wanted to make one point that, from the 1st of April up until now, the Nifty Bank is now up 11.5%. We started the month at about 18,000. We're now at 20,000 plus, looking pretty good for the bank Nifty. But as you said, today, on the flip side, you have a couple of these spaces like pharma, FMCG that are coming in for a bit of profit taking. But Prashant, there are so many things that the market has to reckon with now, right? You have Axis Bank's numbers coming up. Global markets, although stable, the Dow futures are indicating a bit of a tricky start later this evening.
Oh, absolutely, Sonia. Lots of stuff to watch. And by the way, the 38% retracement is again in play. It's in some senses unbelievable because it's worked down to the T. We've had, 3 touch points at the 38% retracement of the full fall, and the market is reversed. So let's see. I mean, if the market probably in the next attempt crosses it, but I think with every attempt and then the market cooling off, the probability of that happening withers away a little bit. That's how I would look at it. But let's start with the big story, that is Reliance Industries and the proposed rights issue which the board of Reliance is going to consider. Sonia, why don't you take us through the details of what is being considered, and then we'll have our colleague Nimesh join us to tell us what various amounts of dilution may do for earnings in terms of earnings accretive or otherwise for the company. Sonia.
Sure. So, this is the big news, right? That Reliance, the board, will be meeting to declare results on the 30th. More importantly, they will consider a rights issue on the 30th as well. They're looking to recommend a dividend on the equity shares. Now, this is important because this is the first rights issue that the company is doing after 3 decades. The last time Reliance tapped public funds was way back in 1991 when they issued convertible debentures. So this is why the rights issue assumes importance. Now, the current promoter stake stands at a little over 50%. The total paid up capital of the company is 630 crore shares. If you look at even a 5% dilution, that would mean that the company can raise to the tune of around 40,000 odd crores. Now, remember, Reliance aims to be debt-free by March 2021, and this rights issue is a step in that direction. A lot of experts that I spoke to believe that this exercise is a show of strength by the promoters. It will also strengthen the case of prospective investors by bringing in additional capital into the business. However, you have the earnings as well that come out on the 30th. So, in that context, the core oil and gas business is expected to be on the weaker side. That's because the demand for transportation fuel has been under pressure due to the COVID-related lockdown. However, the 2 other businesses, which is telecom and retail, are expected to do well because the consumption of data as well as, retail has gone up during the lockdown. But this is the story. Let's find out what brokerages have made of, the news flow on the rights issue and how to approach the stock. My colleague Nimesh is here to tell us more about that. Nimesh.
Hi, Sonia. So, this came as a bit of a surprise for a lot of analysts, including Morgan Stanley as well. The report very clearly says that while there is no indication on the amount and the price at which the rights issue will be done, they've done a potential, scenario analysis of say 2 to 12% equity if it is done at a 5 to 20% discount to the current market price, and what this would mean for earnings. And also, they believe that in that scenario of 2 to 12% and at a 5 to 20% discount, it will be earnings accretive of 0.1 to 2.6%, and this will lower the debt of Reliance by another 4.5 to 34%. So that's the different scenarios that they've worked out, at different prices and at different this thing. So if you look at the lowest range, which is 2% equity, and if you look at the EPS dilution, which is very minimal at just 0.1%. But if you look at a 12%, fresh issue on new shares and a 5% discount to current market price, that would mean that the debt plus liabilities reduction will be as big as 28%. So there are different scenarios been worked out, but Morgan Stanley has been bullish on the stock and they retain their overweight, but they believe that it will be EPS accretive between 0.1 to 2.5%, and this would mean that the debt could be lowered by as high as 30% if it's on the higher side.
Okay, Nimesh, thanks very much for that. I mean, the stock is down about what, 1.5%, but that kind of gives you a rounded perspective on what Reliance is proposing to do and the impact it may have. Of course, I mean, we don't know the details of how much they plan to dilute, etc. Those details, of course, will be known in time. But as Nimesh pointed out, we can do some scenario building, and that is what Morgan Stanley has done. IndusInd Bank is the other one, which has been up and about since the very beginning, very start. It's up, has been up between 8 and 10%. Abhishek, my colleague, is joining in with a quick take on the numbers that IndusInd reported and what's the street making of it. Abhishek.
IndusInd Bank reported a mixed set of numbers, however more on positive front. Now the NII growth was pretty strong given the fact that they were able to control their cost of funds. As a result, the net interest margin came in at 4.25%, perhaps an all-time high for the bank. Now the deposit mobilization has been pretty strong. That's what management mentioned in the con call. Whether it is retail deposits, government deposits, or even the corporate deposits, they have mobilized about 6,000 crore in corporate deposits alone in April. So the COVID-19 related impact, management expects credit cost to rise by 50 basis point while NPLs to deteriorate by 80 basis point. Slippages remained elevated at and around 2,060 crores, which compares to 1,945 crore in the previous quarter. As a result, gross NPA in absolute value increased by 12.5%, and as a ratio it stood at 2.45 when compared to 2.18 in the previous quarter. The NII was pretty strong. It beat our poll by a huge margin. However, PAT was below our poll on account of elevated provisions that the bank made. Back to you.
All right, thanks a lot, Abhishek, for that. Well, Hexaware comes out with its numbers tomorrow, and ahead of that, that stock is under pressure. So do keep an eye out there. But talking about earnings, Ambuja Cements delivered on all counts, really, whether it was volume, growth, realization costs, and in a tough environment, they delivered quite a good set of numbers. My colleague Nigel is here to give us the breakup of how the numbers look. Nigel.
Well, that's right. Ambuja's numbers look quite good. On the top line itself, it was more or less in line with what the street was working with. But the margin expansion, that's something that the street liked very, very much. Margins came at around 21% odd. We were working with a number of closer to around 18% odd. The only chink in the armor really would be the volumes. Volumes missed our estimates by roughly around 2%. Let's run you through why the numbers were a bit though. Margins were better than what the street was working with, primarily because realization jumped up by close to around 7% on a year-on-year basis. High exposure to North as well as West India, that bodes well for them. Besides that, pet coke prices have come down lower, so they have some kind of benefit for that as well. And their premium products business did see a growth of close to around 3% odd. On the back of these factors, you had the EBITDA number came in at close to around 1,050 rupees per ton. That was a positive if you compare it on a sequential basis as well as on a year-on-year basis. Brokerages, well, they more or less have the same theme. They say that these numbers were a beat. They also highlight the fact that the stock is trading at a discount to its normal multiples, and that's why if you look at HSBC, if you look at Morgan Stanley or even CLSA, all of them remain positive on the stock. Back to you.
Nigel, thank you very much for that. So that is cement in focus. We'll have to take our first quick break here, and we'll do that with news that the Nifty is up about 32 points. We are at 9,314. The Bank Nifty is still holding up with about a 1.8% gain. I mean, you look at Kotak, ICICI, Axis, and you basically figure out the reason why. The Bank Nifty is still holding on to those gains, even though the Nifty has come off quite a bit. Take our first quick break here. Commodities in focus. My colleague Manisha joins in with a guest on the other side. Stay with us.